Welcome back to The Wealth Architects. We're going to bring you another video that explores the different aspects of finance. Our topic for today is understanding recessions, how to protect your wealth. Let me ask you a question. What is recession? With growing inflation, rising living costs, more layoffs, a reduction in GDP, decreased confidence among consumers, an economic downturn, and a deflating economy, analysts believe that the global economy will soon be going towards something unavoidable. The dreaded R word, recession. In the words of Pierre-Olivier Gourinchas, International Monetary Fund Economic Counselor and Director of Research, the global economy's outlook has darkened significantly since April, and the globe may soon be hovering on the edge of a worldwide recession only 2 years after the last one. The instinctive response to such news is to pay out and suspend, if not completely, and continue investments. After all, investment entails some risk, and it will be awful to see the money you've invested go to waste when its worth plummets. When a country's GDP falls for 2 consecutive quarters, it is said to be in a recession. Regardless, cashing out is the most important thing on your mind at the moment. Instead, your immediate priority should be to understand how to preserve your financial account to minimize losses. Here are some strategies to protect the security and safety of your wealth. Stay invested. Don't panic, and don't adjust your portfolio yet. Even if a recession is predicted, this does not imply that you should worry and stop planning. This is the time to design a strategy that takes into account the difficulties that may arise during a bear market. Make a list of your finances and investments and create a financial strategy that takes into account the possibility of worst-case scenarios and circumstances. For example, what's your backup plan if you lose your work or have a health concern in the coming year? Do you have extra money set up as a backup? Though it may appear contradictory, balancing your portfolio when investors purchase and sell stocks to re-establish the original asset allocation appears to be a safe bet. It should be one of the last things you do when a market sell-off, since it locks in losses. When the market appears to be in decline, it's advisable to hang on to what you've invested. Rebalance after the market stabilizes and evens out. If you realize you can't take the volatility, you might rebalance into a more conservative portfolio to reduce your stress. Traditional investments, such as mutual funds or unit trusts, may require the assistance of an investment advisor, but digital investing platforms, such as robo-advisors, may help you rebalance digitally by measuring your risk tolerance. Re-evaluate your spending and improve your savings. For a first step, examine how you spend money and devise a plan to raise the amount you save. Building your emergency fund can prepare you to deal with future expenses that aren't currently in your monthly budget, such as unforeseen spending due to a cash shortfall, a layoff, or other unexpected occurrences such as a spike in food or petrol prices. A 6-month emergency fund will assist you in dealing with future financial difficulties. Furthermore, during recessions, persons having access to cash are better positioned to take advantage of potential investments that can dramatically enhance their long-term financial situation. Discovering a second source of income, in addition to your daily work, will keep you well prepared. Whether you opt to take on a part-time job, establish a side hustle, or sell old things such as books, clothes, and jewelry through second-hand suppliers, earning extra money will provide you with something to fall back on if your primary income is reduced or lost. Okay, so far we've shared some how to protect your wealth tips. Now you may think that I only have these tips to protect my wealth. Is that true? To find out, you must watch this video till the end, so let's continue again. Invest regularly while keeping expenditures reasonable. When the economy is sluggish, stopping your investment is arguably the worst thing you could do. When prices are falling, it typically is the greatest opportunity to buy stocks at a lower price. Although it may be tempting to pause or search for investment possibilities before investing, the fact is that you will never know when the right time will come. Make your investments more consistent by automating them. Investing regularly protects investors against potentially disastrous investments. Using accounts with tax advantages and deductions will assist you in lowering your overall tax bill and accumulating greater wealth. You may prepare for the next recession by carefully examining your finances, increasing your source of income and reserves of money, and investing gradually and regularly. Do this, and you could find yourself in a considerably better financial situation by the end. Invest in items that will appreciate over time. As your financial reserves grow, investing more in assets, which means things that appreciate, such as stocks or real estate, will ultimately pay off in the long run. The idea is to make investments with a 10-year horizon in mind. During a recession, you may buy more assets for a lower price. When the stock market falls, it gives a chance to invest in or buy shares of good firms at a lower price. One of the most essential things to understand about investing is that it is for a long-time financial play. So try not to get discouraged by the market's short-term swings. During difficult economic circumstances, the use of dollar-cost averaging or making investments in the stock market gradually rather than all at once is particularly important. Look for low-cost stocks or buy the dip. Buying inexpensive companies with the potential to rise massively during a recession is a fantastic idea. When the world economy looks terrible, stock prices fall, which may appear to be a bad thing on the surface of things, but it might also be a fantastic opportunity to purchase equities at a discount. This method will need you to sift through hours of financial statements and economic analyst reports to find undervalued firms that have the potential to thrive in the future. These are often high-quality enterprises in industries that have been struck hard by the economic slump but can withstand the storm. You may prepare for the next recession by carefully examining your finances, increasing your source of income and reserves of money, and investing gradually and regularly. Do this, and you could find yourself in a considerably better financial situation by the end. Hope you got some knowledge about how to protect your wealth during recessions. If you found this video helpful and want to know more interesting things like this, stay tuned. For that, don't forget to subscribe to The Wealth Architects, like, comment, and share our videos. So thank you so very much, and I hope to see you again soon. Bye.